The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Stock of the day, though, is ARN Media. This comes after the radio station terminated its 10-year, $100 million contract with radio star Jackie O. Henderson. Jackie, one half of the high-rating Kyle and Jackie O show, has disappeared from Sydney Kiss Breakfast show and has since told management she can no longer work with her co-star. Now, the fallout is now putting Sandy Lands himself under the microscope, given he has 14 days to address what ARN is calling a serious breach of misconduct, throwing the future of their partnership into doubt. Their 10-year, $200 million deal in total is the biggest in Australian radio history, making this fallout one of the most dramatic shakeups in the industry in years. At its half-year results, ARN had forecast second-half revenue to decline by low double digits. And you can see there the share price over the year down by 42%. Today, though, off the back of that news, at one point was up by more than 5%. Now, gentlemen, putting aside questions as to where my $100 million contract is, that's for another day. Andrew Whiteland, DP Wealth Advisory, radio. What do you make of this development when it comes to ARN specifically?
Just as an aside, Nadine, I actually just had completely ignored this. I saw it come up a couple of weeks ago that there was a spat, and I just went, it's just hype, it's just noise. And then there was that ASX announcement overnight, and I thought, probably should start paying attention to this. And I was discussing this briefly with my wife, and I said, you realise these two are $100 million each. And she just went, are you serious? I went, deadly serious. So, it's really interesting stuff when you consider that ARN or A1N, the ticker, their market capitalisation is $113 million. $113 million, and they were paying these two collectively $200 million for the next 10 years. It just defies logic. Anyway, to your point around radio, and if I was to cast the net a little bit more widely around traditional media, I think it's, without being captain obvious, it's super tough for traditional media at the moment, where previously they could be generalists and try and cover a whole range of areas. It's proving to be very tough because you've got these more nimble niche media players, and I think of one off the top of my head, whereby they're hyper-focused on their audience, they serve their audience well, and those people are flocking to those particular niche media organisations rather than sort of more the generalists. So probably the only thing going for radio is you're hostage when you're in the car if you're not listening to your favourite podcast, the call on catch up or something like that. So, and the other thing I guess I struggle with in the context of ARN is the turnover on this is just ordinary. I think it is $19,000 a day. So on a $113 million company, $19,000 a day in shares are traded. So even if you had this epiphany, you thought this was an amazing investment, it's super hard to get set, Nadine. From an investment point of view, their return on equity and their margins are very similar to Nine and to Southern Cross. But ultimately, traditional media's got some challenges. It's the niche nimble players, so it's an avoid.
A total avoid. Yeah, is this value, deep value, or a value trap in your view, Henry?
Well, I have to say, Andrew, I think, has nailed it. For a $110 million company to be paying these two buffheads, both male and female, that kind of money is ridiculous. And it was always ridiculous. And the share price has been going south on the back of it. So, I think, to quote Queen and Radio Gaga, you've had your time, you've had your power. All we hear is Radio Gaga, and Andrew's right. There's not a lot of volume in this one. There's not a lot of interest in this one, to be honest. If you're in your car, you'd be much better off listening to a podcast from Ozbiz as opposed to Kyle and Jackie O show, I'm afraid. They have done terribly in Melbourne. Melbourne clearly has put a lot of pressure on the duo. I listened this morning as a matter of just interest to the on-air argument between Kyle and Jackie. And I can't believe, Kyle is still on the radio, but there you go. It is not investable as far as I'm concerned. There's no reason to believe that this is going to turn things around. It's going to save them a lot of money if they can wiggle out of the contract, but they'll probably spend that on lawyers. So I think if you want to look at the media space, obviously NEC 9 is probably a slightly better, more stable bet. It also has Stan, and it has, of course, the Fairfax newspapers as well. That has certainly been, I was going to say better, but it's still, the share price is in the toilet. So that's despite the Winter Olympics, etc. So it's really kind of a space that you kind of avoid, to be honest. Free-to-air advertising and free-to-air channels. Maybe News Corp is a better way to go out of all these, but certainly I wouldn't be going anywhere near A1N, even if Kyle and Jackie O don't get paid their $200 million between the two of them over the next 10 years. I mean, it's astounding what these guys get paid for doing what is not that. Yeah, I won't even go there.
Yeah. All right, guys. So you've made it pretty clear, and I do like how you did that, Henry. And why wouldn't you be listening to an AusBiz podcast? We have two, The Call and the COB. Lovely to listen to as you go about your business. Thanks, guys.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.